Hi and welcome back to the New Zealand Property Podcast and Video Series, sponsored of course by Property Ventures Real Estate. And on the right of me you have see today is Kris Peterson from Kris Peterson Mortgages. Welcome back.
Good afternoon.
And we've got Kris back for a pretty special reason. In fact, Kris usually talks to us when rules have just changed about what might happen coming up and how it might affect investors and what have you. But this time we are preempting a maybe change coming up. So, and that's been the loan to value ratios, or LVRs as we'll refer to it in the next wee while. But just a bit of history, I guess. And I'll ask you, Kris, I was going to do it, but you know a bit more about it than I do. Just over the last, I guess, 5 years with the LVR rules, I remember the market was particularly hot in Auckland going back about 4.5 years ago. Well, no, in fact, 5.5 years ago now. And the national government back then brought in the LVR rules to try to stop, and I think they brought in 40% deposits instead of 20% deposits. So what sort of happened over the last 5 years?
We've had a few changes actually. So first, should we say, regulation in regards to deposits actually happened back in October 2013. So a touch over 7 years ago now, and that was, I think, the Reserve Bank realising that they didn't want to just use interest rates as a mechanism to try and slow the property market down. That didn't work that well the previous cycle, where we actually ended up ratcheting interest rates up quite high, but with a mixture of people being able to fix to kind of get around that issue, so we like fixing in New Zealand. And secondly, it had a flow-on, should we say, detrimental effect to exporters, because when you're messing around with interest rates, you're playing around with that as well. So they decided to start using these other mechanisms to try and control the property market, and we initially saw that in back into 2013, mainly hit first home buyers. The one that I believe you're talking about there is when Auckland was going absolutely gangbusters, 2015, and so we actually saw the only time we've actually seen a regional restriction. Yeah, Mark, so you'll remember, I think, kind of back into 2015 where we saw Auckland kind of get hit by the 30% restrictions. But yeah, the rest of the country, we only needed to get in with 20% as an investor. So we saw the flow-on effects, especially I remember Tauranga and Hamilton, a lot of Auckland money going down there, and those places really starting to pump up. And then going into 2016, we saw the Reserve Bank really try and hit the investment market with 40% deposit restrictions across the country. Since then, I suppose...
I remember that point there in particular, especially the Hamilton market, because Hamilton's pretty crucial to our business, and it was going gangbusters, as you said, and then it just it stopped for a year. It worked.
Yeah,
we worked a treat for what they wanted. Yeah. Not great for investors or real estate.
100%. We very much saw it was just like the brakes went on overnight.
Yeah.
And I think something which probably those people who have mainly seen it relaxing since then won't maybe remember as much is when it was tightening. The Reserve Bank might have announced a rule, but they might have even announced that the rule was coming a little bit down the track, but the rules tended to kind of come in earlier. So they can start to get enforced by the banks quite quickly.
Yeah, and that's something we'll probably talk about soon.
Yeah.
So just moving forward then, the LVR rules have always been there to some extent. Earlier this year, as soon as COVID come in, they changed. The government were trying to get people still spending money and what have you, and interest rates has come down. And it was earlier this year they actually took as such the LVR restrictions off as such. I know the banks have still been using it within reason, but explain that and probably what's happened to buyers, both first home buyers and investors since then, I guess.
So I suppose a couple of key points there. We'd actually seen, I suppose over the last couple of years, and that feels like a long time ago now, the Reserve Bank starting to relax the LVR rules. So we went from that 40% deposit kind of up to only needing 30%. And it was a pretty hot market prior to COVID. I remember being down in Tauranga doing a talk with you, I think in February, and hardly spoke to you because we were on the phone talking to customers the whole time. It was absolutely crazy. And then of course we went into lockdown, and I think the Reserve Bank, other economists, Treasury, what they were expecting was potentially house prices to pull back quite a lot, and so that's why they pulled the LVR rules off. I think the concern is around confidence going. If house prices come back, people start feeling more poor, they don't spend, and that has a bad flow-on effect to tourism, hospitality, retail, and unemployment rates could spike. So by pulling those off, the idea was that maybe that props up confidence a bit. In reality, what happened is we came straight out of level 3, and I know that you were the same as us, and it was just like it was prior to the level 4 lockdown, but with the benefit, I suppose, of lower interest rates. And so it just
and
went
the fact,
absolutely
and the
mental.
other thing people forgot about were more buyers had come. Those buyers were actually still there.
Yeah.
During lockdown, and then a new group of buyers had come through. Just through normal happenings that goes on in people's lives. So, when the interest rates were going low, we had more buyers, and of course now we've interest rates so low. Of course, we've got investors all back in the market that probably weren't going to buy this year. So that's where we've got abundance of buyers, and why the market's so hot, I guess, right now.
Yeah, now you've got to probably, even with some investors, a little bit of FOMO because they're just seeing the market going nuts. So that's got that kind of flow-on effect of people kind of coming in as well. And definitely right around the country at the moment, we're seeing frenetic markets, people missing out. I had 4 new people contact me yesterday wanting to get pre-approved within auctions of a week, and to be honest, they're all probably dreaming because banks are taking longer than that to turn things around.
And we've seen some absolutely crazy results at auctions in the last 5 or 6 weeks, particularly with the land or places in Auckland that can be developed by developers or even small developers. And we've seen one in particular went 50% above what the reserve was. So, for example, the reserve was $900,000 and it sold for 1.350.
Yeah.
So that's out of control. I guess out of control market, and that's why we've come to this conversation today. Because if you watch the news every day last week, not that I usually do, but I did a couple of days last week, and all over it was, how's the market going to slow down? It's so hot, and mentioning those horrible 3 words, LVRs. Well, good words, but sometimes. But so there's a lot of pressure right now to increase the LVRs. I think we had a chat a month or so ago, and you were talking about maybe mid next year that they might bring restrictions back in again. I guess you're thinking a little bit different right now, and that's probably why we're here. And it's all hearsay, and
I'm really on the fence.
Disclaimer.
I'm really on the fence. There's a lot of heat. You've had the Reserve Bank Governor Adrian Orr come out and give the heads of the main banks a bit of a slap in the last week or so. Kind of inferring that he wasn't that impressed with how things are going. I know Grant Robinson is actually meeting with him next Monday, and while the Reserve Bank's supposed to be independent, I'll be very surprised if house prices aren't brought up in that conversation at some stage. And so in about 3 weeks' time, we've got what's known as the Financial Stability Report, and the Reserve Bank does that twice a year, and that is the normal vehicle they use to announce changes to the like LVR rules and things like that. So original intention was that we wouldn't probably hear about them until probably May next year, but there is a slight chance popping up in 3 weeks' time that they may decide to pop that on early. As I said, I'm right on the fence. Part of me sits here and it goes back to that confidence issue that I'm sure the Reserve Bank would like people to be going into Christmas feeling richer because of house prices going up. That means they spend more in retail, and that probably obviously has a good flow-on effect to jobs, but there is going to be more and more talk about inequality and house prices going up, which will potentially cause a few political issues at the same time.
Yeah, I guess generally the Labor government, so we call it Labor government or Labor-led government now, I don't know what we call it, it's just probably Labor now right now. Traditionally wouldn't like to bring bad rules, you're saying, right before Christmas to stop spending or what have you. But I guess as you said to me, off the record sort of thing, is what's happened previously, and you'd allude to it, if for example they did say on the 25th of November they're going to bring these rules in February, March, whatever, generally the banks start taking them into account pretty well immediately, don't they?
Yeah, I mean, there's already been some signs of tightening. So it's been interesting. While we saw the rules come off around start of May, Kiwibank was the only kind of bank to make a quick move. We saw the rest of the banks be quite slow to move, and we've seen banks like Westpac and TSB who have never actually gone back to lending above 70%. Since then, we've seen some banks put in, shall we say, little restrictions in that 70 to 80% space for investors. ASB has been applying what's known as a debt to income tool, which I won't get into here, but it's just making it a bit more tough. And even BNZ's had harder affordability criteria. So it's not just been like it used to be in the great old days where probably kind of 80% funding has been treated the same as 70. There's still been these other levels of restrictions, and I wouldn't be surprised if the Reserve Bank's played some part in that behind the scenes.
Right.
And I think even if the Reserve Bank decides not to pull that back in on the 25th of November, I'm expecting some pretty strong commentary in regards to it.
Yeah, certainly be interesting what happens. So tell us if on the 25th of November they did bring LVR rules in, or they don't, and then it comes in May next year, whenever that time happens, how's that going to affect investors, and how's it going to affect home buyers? And I know it obviously depends on what levels they do. They're not probably likely to take it from 20% to 40% for investors straight away, or probably 30 would be the obvious maybe thing. But how's that going to affect an investor with a portfolio, or even a first home buyer?
I mean, jumping actually briefly onto the first home buyer space, because I have completely focused on the investment market here. I don't think the LVR rules being kind of relaxed has actually really had too much of a change there.
Yeah.
So what the banks had been allowed to do is effectively 20% of their total funding on LVRs with less than a 20% deposit, which was very targeted in that first home buyer space. So with the rules being removed, they could theoretically do as much as they want. But if we go back to, say, January, February, we had seen some of the banks start to do loans with as little as a 5% deposit. And we've basically seen that removed with the exception of the government product basically since then. So banks in some ways, I'd say, if anything, have maybe slightly tightened in the first home buyer space since the start of the year, with maybe a slight relaxation recently when they realised their house prices weren't going to pull back. Parts I'd say for the investor market is keep in mind, even if you're pre-approved and you might have a pre-approval which can cover you for 6 months, what we saw in previous years when it tightened is often clients were literally given a month or 6 weeks or whatever to settle, and they couldn't literally actually run their whole pre-approval time out. So I wouldn't be surprised if something like that happens again. If you're not pre-approved, what we definitely saw in 2016, we had applications in and they just got cut. If you didn't have that bit of paper, you were literally kind of cut overnight. So, I mean, we've been saying to people, if you want to get into the housing market, get pre-approved anyway. As I'm sure you're having similar conversations to me, the banks are probably the slowest I've ever seen. And if you've got any interest, get pre-approved so you are ready if a good deal comes around.
Definitely the pre-approval. I mean, on that point, pre-approval is, forget about what we're talking about today, is so important right now. But as I said, because the banks are so busy, there are so many buyers back in every part of that market right now. So, in 10 days is 10 working days is a struggle for the banks. What I'm seeing from other brokers and other people or buyers themselves too. So, getting that pre-approval is absolutely imperative.
Yeah, we put an application on a Friday and we were told it was going to be 20 working days before they actually picked the application up.
Really?
It's not processed, picking it up. So, and we're seeing purchases be more creative. I'm sure you're seeing a lot of this as well, where those were ready to go are getting in there and putting pre-auction offers in, and good cash offers to try and cut other potential purchases out. So you want to be one of those people where you're ready to actually get in there and buy. And just don't expect this to be like previous times where you've dealt with the banking market. It's a lot tougher and it's going to take a lot longer to potentially turn around. Yeah, so get ready.
Okay, so just give a practical example, I guess, for the people watching and listening to this, is if you might have just refinanced with yourself or your bank or whatever, and we'll say for argument, nice round figures, you had $1 million of $1 million of equity, and I bet I'll get this right. If you at the moment could use 20% of your money as deposits, you'd have $200,000 you can use in deposits, right, at the moment. And so, if your portfolio, if that changes to a 30% rule overnight, you'll now need.
You've gone from a
$300,000.
$200K could get you into, say, $1 million purchase.
Yeah, that's what I'm trying to get.
Then, if it goes to, say, a 30% deposit, that's cutting you down to about a $665,000 purchase. So, quite a heavy reduction.
Yeah.
On that point, what we're recommending a lot of people do is, if you've got your own home and an investment with the same bank, drag the investment away in another bank and leverage it to 80 while you can, which means you can have more equity stored in your home. If the rules come back in, you can then top your home up to 80. So I don't think that rule will change.
Yeah.
If you keep both of them with the same bank, they're going to assess your home back at 70, which means that you'll have less overall equity you can use for moving forward. So even if right now you're going, okay, we don't want to get into the market for whatever personal reason you have, we're still recommending for anyone who wants to be investing in the next couple of years, it's worth doing this rejigging to set yourself up for moving forward.
Yeah. No, that's important. So there's two ways of looking at. I guess your affordability will go down, and all of a sudden if you've actually just got some money ready to pull out to buy something else, that's going to be affected by your overall thing as well. I've got a situation myself. We're looking at lending at the moment, and it's that could affect my situation by $100,000 just by the LVR rules coming in
100%
over a few properties sort of thing.
Yeah, so just that kind of restructure. And the same thing, we've got clients who have already split banked correctly. but because of, say, recent house price rises, they've ended up with a kind of what I call unutilized equity in the rental property.
Yep.
Now's a good time to kind of top those up to 80, pull the additional equity across, pay your home down, because it's going to be a much better setup for the future.
Yeah, absolutely. Okay, so your advice to people listening now, I guess, is that you've already said to obviously separate your home from a different bank if you can, from your investments. As buy or get finance approved for things before 25th of November, but we don't know it's going to happen on the 25th of November. So
it could go either way. I mean, economists like Tony Alexander.
You're saying be prepared, I guess, if it does.
Yeah, 100%.
Get out there and buy it now if you're deciding whether to now or next month. Do it this month.
Yeah, I mean, one way or another, this is not going to be. I'll be utterly shocked if we somehow get past May next year. I just can't see that happening. So this is definitely not a case of the rules being removed and being off for a long time. It's really a question of whether we hear them maybe kind of going back on prior to Christmas or a few months into 2021.
Okay. Yeah, May would be good. May would be a good result.
It would be. It would be. I'd agree with you there.
So totally separate subject to the LVRs, but the interest rates, there's no reason whatsoever you see them changing or happening in the next probably a long time by all economists at the moment.
If anything, they're coming down more. I was just having a look at a couple of bank interest rates there, and we're starting to notice those 2 and 3 year rates really kind of dip down into the mid 2 and even slightly beneath that. So I haven't actually read the article yet, but there was some talk potentially about the Reserve Bank even pulling the official cash rate negative in February. I haven't had a chance to dig into that. If that happens there, then we're going to see rates drop lower, and there is a chance that what the Reserve Bank decides to do is time maybe a restriction going on with the LVR rules and interest rate reduction at the same time. There's also, a lot of people who are maybe taking mortgage deferrals. They got the chance to take them for another 6 months. September and October, so those are going to be coming off around the April, kind of March, April time next year.
Right.
So I wouldn't be surprised if the Reserve Bank's maybe timing for interest rates to kind of duck down that a little bit more to maybe assist those people coming off at that stage.
So still fantastic news for people who are investors who are leveraged lowly or 50% or less sort of thing. Great results with interest rates sort of still coming down. Out of frustration for other people, I guess, if when the LVR rules go up, because lending being so minimal as it is now, not to be able to get in there. So I guess if you're in one of those categories, in the second category, if you want to get in the market, time to do it sooner than later, I guess, because it is a matter of time before the LVR rules will come in. I guess it's been a proven tool for the government to use in the last 6-7 years, and it does work to slow the market down. And it's going to happen sometime. It's just a matter of when.
It certainly is. Yep, I'd agree with that.
Okay, anything else you want to add today, Kris? Anything in the finance world? Or
the biggest thing I'll just be saying for people is just get ready. If we're repeating ourselves again and again, but just if you've got any intention of getting out of the market, just go through the effort of getting pre-approved first. There's massive differences in the banks and how difficult one bank's being to another. So what's happening in a lot of cases is we're seeing a client who's going into their existing bank, they've been there for years, they're expecting to be treated the same they have for the last couple of decades, and that's not happening. Especially if you're self-employed, expect that to take a little while to basically turn around. So, this is probably the hottest property market I've seen with a difficult funding market. Normally, you have a hot property market where money's kind of getting thrown around. So just kind of take that into consideration.
Great. Well, thanks very much again, Kris. And
thank you.
And how do people get hold of Kris Peterson Mortgages? What's the best way to do that?
Feel free to give me a call on either 021 300 192 or email address info@krispeterson, which is KRISPEDERSEN.co.nz, and we'll get one of the team in touch.
Oh, good. A lot of our investors have used Kris over the years, sort of thing. And as a real estate agent, we're not allowed to necessarily recommend a particular brand or whatever for it, but always, like I say, is a lot of our investors use Kris. So I use Kris myself, and but that's all good. So thanks for your time. Thanks for being here today. And I think we've got a couple next 2 podcasts are going to be stories of investors with what they've been doing and pitfalls and successes. So keep listening, and we'll see you again next week.
Thank you.